Picture this, you're a trading desk looking for opportunities to profit from price discrepancies across crypto exchanges. For years, latency and network congestion made that nearly impossible at institutional scale. But that's beginning to change. And Firedancer, Solana's new independent validator client, is at the center of it. Built by Jump Crypto in C++, Firedancer isn't just another upgrade, it's a complete reimagining of how Solana processes transactions. In test environments, it's clocked more than 1.2 million transactions per second. To put that in perspective, that's nearly 20 times Solana's current mainnet performance and faster than Visa at peak capacity. For high-frequency traders, that's not just impressive, that's transformational. Why speed matters for arbitrage. Arbitrage is all about speed. If Solana trades at $185 on one exchange and $184.80 on another, you've got a 20-cent spread. But that window may last only milliseconds. Traditional markets solve this with co-location and fiber optic cables. In crypto, it's the network itself that decides who wins. Firedancer's increased throughput means trades propagate faster, confirmations settle sooner, and spreads tighten across venues. This does two things. It improves price discovery for the entire market. It makes Solana more attractive to professional market makers and proprietary trading firms who need predictable execution to deploy serious capital. In short, Firedancer turns what used to be a bottleneck into a competitive advantage. Compliance and market confidence. Institutional adoption isn't just about speed, it's about trust. One of the criticisms of crypto arbitrage in earlier cycles was opacity. Regulators worried about fairness, and retail traders often felt outmatched by predatory latency strategies. Firedancer addresses those concerns by adding redundancy and resilience to Solana's validator set. Having a second independent client reduces the risk of single points of failure and strengthens network security. For compliance teams, this is critical. It means lower operational risk and more reliable reporting, which makes regulators far more comfortable. The bigger picture, institutional playbooks. The implications go beyond arbitrage desks. As spreads narrow and liquidity deepens, retail investors benefit from better prices, and funds get more confidence that their strategies won't be derailed by network issues. Institutions are already developing playbooks for this new environment. That includes benchmarking latency against Ethereum and Avalanche, integrating Solana into multi-venue routing systems, and adding compliance overlays to ensure reporting is regulator ready. This mirrors what happened in equities and FX markets years ago, where performance and governance were built side by side, balancing speed with risk. Of course, faster isn't always better if risk management can't keep up. Firedancer introduces the possibility of even higher frequency trading, which comes with increased infrastructure costs and potential liquidity mismatches if exchanges don't upgrade in sync. That's why strategic planning matters. Risk teams are working with digital asset consultants to build guardrails, analyzing concentration risk, modeling liquidity scenarios, and preparing governance frameworks that can scale with speed. Kenson's role in the Firedancer era. At Kenson Investments, we see Firedancer as more than a technical milestone. It's an investment event. Our team helps institutions evaluate how Solana's performance upgrades can fit into their portfolios, from arbitrage execution frameworks to compliance-ready reporting systems. Because in the next phase of digital asset markets, speed will be table stakes, but strategy will be what sets leaders apart. Visit kensoninvestments.com to explore how we can help you integrate high-performance infrastructure like Firedancer into your digital asset strategy.